I can't even believe that we're at this interval. Like to me, it's just, this seems like just like a bad dream. When I look at like where we were in last year at this time, and like watching the Raptors win, and now we're like, watching everything in in bubbles, and it's just like, watching COVID numbers. It's crazy, man. But so Laura, what's going on? I heard that the banquet halls are and nightclubs. Who's going to get married now in the West Coast? What happened?
There's some really cool outdoor weddings. Actually, some of my staff got married, one last weekend and one coming up. Just small, intimate. It's good. The West Coast is good for the outdoor weddings, right? We got a nice.
That's awesome.
Scenery.
Yeah. So this is like, I feel like we're all going back in time when we were kids, where everything was road trips, everything was on a bike. You could only go as far as like your gas tank will allow, right? All sorts of family stuff. Like this has been like a blessing. I don't know about you guys. How about you guys? Like in terms of a blessing of having this on.
Totally.
Yeah, man.
I actually just saw somebody snorkeling down in the ocean here in North Vancouver.
Are you serious? Wow.
Yeah. It's 28 degrees in Vancouver today. It's beautiful.
Oh, yeah.
Wow.
Great.
So lucky.
You guys, I'm jealous of Vancouverites because in Calgary, I came back from the mountains from BC, 30 degrees, came to Calgary, it was snowing on the same day. What is going on in this country, man? How could you just go from one, 4-hour drive? It's like 2 inches of snow on the ground. It was crazy in the middle of September. Yeah, Raj, what's going on with you guys in Toronto?
Oh, dude.
Well, it's fall. I mean, we have fall weather. We wished it was still summer, but it's kind of cold. So, it's not bad though. Weather's chilly. It's nice. We started opening up the indoors a little bit. People are coming in, waiting indoors now, and we had like this big ass wedding in Brampton that had like a huge spike of cases. 300 people.
Guys,
did you hear about that, Danny?
Yeah.
Schools are delayed. Schools are delayed a week, so everyone's going to school next week, and we're just waiting to see what happens next, man.
Wow, Laura, is school open in Vancouver?
Yeah, my son starts tomorrow, so we'll see.
Oh, nice.
Staggered entry or just straight up?
Straight up, off you go.
Oh wow, this is how old? How old is your son right now?
He's going into grade 2.
Ooh,
nice.
That's awesome.
They staggered it for us.
Nice.
I think every district is a little bit different this year, so we'll see. We'll see how it goes.
Nice.
Yeah, one of mine started. The other two are just starting next year, and then next week or something. So every district, every region is actually different.
Yeah.
That's awesome, man. It's one of those things where it's a whole new world for these guys. But I can say that having witnessed the schools in Calgary, the teachers and the principals and everybody, they're trying their best, definitely, to make sure that this is like the safest year for everyone. Just looking at the time, guys. Whoa, we are going on live right now, guys. All right, so PPD Nation, is everyone ready? We're back in full effect. PPD Nation, Physio Cream coming live from the lair, the think tank. I'm so excited to be back on the scene. We are officially launching the PPDBiz Academy. I'm so privileged for season 1, episode 1, to have 3 incredible panelists. The whole purpose of the PPDBiz Academy is to increase your business acumen. There's no other time through COVID where we recognize that we need to make better decisions faster and have better information. So these guys that are on the panel right now are going to help us increase your business savvy and make better decisions, one based on physical therapists and experts in the field. Alex is on the bottom there. So in the chat, guys, before we get onto this, in the chat, guys, I want to know, where are you guys all from? Tell us, where are you guys from? Obviously, you want to set this down from all panelists and attendees. Throw it in the chat, guys. Where are you guys from? We're going coast to coast for our panelists. I want to know where you're at. Jackie from Guelph, welcome to the PPDBiz Academy Season 1, Episode 1. Jackie is certainly not the only one, but the only one typing right now.
Jackie is so awesome. Hi, Jackie.
Hey, Jackie, what's up?
Hi,
Kathy from Calgary, my hometown. What's up, Calgary? Anybody? Let's go out some more. We got Van Island, Sophia. Ooh, Sophia. All right, so guys, so we got Bowmanville. Thelma, what's up, peeps? Thelma, nice to get you on the mic here. All right, guys, the whole purpose of as you're rolling into the chat, the T dot, of course, Barry coming up. All right, hey, Thelma. So guys, in the chat, the whole purpose of this seminar is to actually increase your business acumen on a scale. And you know, physiotherapists love scales. What is your business acumen right now? Would you say you're savvy, somewhat, or somebody help me? So on the scale, on that 3-point scale, savvy, somewhat, or somebody help me right now. Put in the chat right now. Thelma says, someone save me right now. Kathy, of course, a numeric score. I think that's a somewhat. What do you think, Laura? Is that Kathy's got a number 2. What, this chat is somewhat. We got Denise. Amazing. All right. So 1 or 2. All right, guys. All right, so what we're going to do is I'm going to go, as always, with the PPD Nation. We want to go coast to coast, and we're going from the East Coast to the West Coast. I'm going to introduce our panelists today. We got 3 astounding professionals, 2 physiotherapists, both CPA members, and a CPA, but an accountant. So we're going to be introducing him to give you the street knowledge that you need to make sure you're maximizing your COVID-19 government incentives. Why is that important? We got a new honorable finance minister, Christopher Freeland, who's making waves right now in the news, making changes day after day. And Alex is going to give us the skinny of what happened in the last 6 months and what to expect. So before we get into all the other physios, Alex, where are you from, brother? Give us a away, man. Where are you from?
Well, I'm from Toronto, and we're based in Toronto and Thornhill, actually, which is a suburb of Toronto. And we're based a 3-partner accounting firm with an affiliate tax law firm, and we do some serious consulting on tax, and we do a lot of commentary on tax and various tax issues. We're an accounting firm that basically gears towards small owner manager businesses. One of our niche areas is physiotherapy clinics. We've got a lot of physiotherapists as our clients, along with chiropractors and other medical professionals. So that's a bit of our background. I'm an accountant, both in Canada and the US. So we do cross-border taxation as well. Right?
Fantastic. And we're going to go to the center of the universe, Toronto, Ontario. And we're going to go to Mr. Raj from Foundation Physio. Raj, give us the skinny. Who are you? Where are you from? And why should we be listening to you?
Good question. I don't know. Why'd you invite me here? Raj here, co-founder along with Matt, Foundation Physio. We grew from 1 to 3 clinics over the last few years. Super pumped to be here. Really, we're here because we want to help share and spread our knowledge about how, COVID affected us and how we've navigated through this, through all these subsidies and everything to get to where we are. And we just want to help spread that knowledge to the PPD Nation.
Yeah, I got to give Raj some mass props. He came to me about a month ago and said, Kareem, with all these changes that are out there and all of this stuff, he was one of the first guys to start up WhatsApp channels and foster the pivot from competition to collaboration in the GTA. I got to give this guy mass props because we're part of a couple of different WhatsApp channels of clinic owners, and people are trying to hustle and survive through COVID. So thanks, Raj, for putting that together sincerely, because we definitely have some significant information sharing on a daily basis. I get 300 WhatsApp messages, 185 are from Raj. And the other ones are from you.
And 184 of those are just gifts.
And so we're going to go down to the West Coast, the paradise, the best province outside of Ontario and Alberta, BC. We're going to the queen, the diva, the mom, Miss Kids Physio Mom. Tell us, Laura Patrick, you're on the mic.
You want to know more about me? Okay. Yeah. So I started Kids Physio Group back, in 2006, so a long time ago now. Started totally out of need to have really great physiotherapy services for children in Metro Vancouver. I had a very small goal of servicing East Vancouver when I first started. And a seed was planted in with one of my members who said, I think Kids Physio should also be in Surrey. And so we opened in Surrey, and then we thought, well, Kids Physio should also be in North Vancouver. So we opened there, and then Kids Physio should also be here, there, and now hopefully everywhere. So we are officially franchised and accepting applicants for franchises across Canada. We opened our first franchise location in Toronto last year, coming up to a year. And we also just announced our newest location will be opening in Hamilton, Ontario. So we're starting to establish ourselves in Ontario, and we'll see where we go from there. Truly
coast to coast. Thanks, Laura. So now I'm going to go back to Raj for a second here, Raj, just because you were the initiator, instigator of this session here. Listen, man, as every PPD webinar that we put out there, we all put out some vulnerability because we all learn from each other. I want to go back to March 2020, when COVID first hit. And clinics were being shut down either by choice or by public order, and you found out that Foundation Physio couldn't open its doors for in-person care before any of these government subsidies came around. Tell us what you were feeling between you and your partner of the future, because correct me if I'm wrong, you went from 1 to 3 in a very short time just before COVID. So tell us, like, what was going through your mind at that time?
Yeah, so we had just actually opened our third location like last May. It was just starting to pick up steam, and obviously then March hit, and we haven't even had a year in, and we're just getting everything kind of started with operating a brand. To be honest, Kareem, when COVID hit, like when we had to close our doors, we closed a little bit early, just out of safety of our clients. The kind of the thought process was already going through. Our staff were already starting to feel unsafe. That was first and foremost, was just out of safety and a positive experience for everybody. But the day that was made, it was like, what next? What do we do? We had no idea these government subsidies. We had no idea what's going to come. We don't know how long this is going to last. To be honest, I thought it was going to be like a few weeks and we'd be okay. So I just went on, started emailing vendors and everybody and saying, can we get a break? And let's started just working on defense, right? Like what can we do? I didn't know what was going to happen. So it was a vulnerable time, and it's hard to almost remember what was happening in March because you're such go mode, right? But yeah, it was not a pleasant time for sure.
So when I remember having these discussions with you, and you were unsure whether the future of physio was going to happen, that there was going to be a bunch of clinics shutting down. Mm-hmm. When the first government incentives came out, what was the first one you went for?
I think the first one that came out was correct me if I'm wrong, Alex, the CEBA, the CEBA, the Emergency Business Account, that $40,000 loan.
Correct. That was the first one that came out.
Yeah, that was the first one that came out. So we went for it just because we had some immediate bills we had to pay by the end of March, right? We had no income coming in. So that was what we went after first, was CEBA. So that was the first one we went after.
Okay. And then looking back, how has the 6 months treated you guys? Like, so, just if you're open to discussing this, how's it been over the last 6 months?
You know what? It's actually, it's not been too bad. I'm not going to lie. The initial closure was not good, the quarantine period. Once we reopened, that build up phase, it built back up, but the government subsidies have really been helpful to help us survive. And we've really put ourselves in using the government subsidies, the money that we've gotten, kind of just that traction of being reopened. We're trying to just rebuilding ourselves for a better 2021. And we've been able to establish better procedures and better protocols, and, just an all around stronger team going forward.
Amazing. So if you could point to one particular government subsidy that was the secret to part of your success, but the majority of the government subsidies, yep, which one would you have put down?
Oh, 100%. It's the CEWS. Since the CEWS was implemented, the CEWS has been, the CEWS has been the number one thing that has helped us survive.
Why is that?
I mean, clearly, partly because we have an employee model. We've got a significant amount of employees, but the way that it's been able to fund us while we still grow our business, we've had a significant amount of revenue, which has allowed us to pay back some of the loans, allowed us to pay back some of CEBA, and invest in new systems to help us go forward.
Awesome. That's great. Now I'm going to pivot over to Laura. Laura, tell me, and we're going to go back because I remember, I remember that FaceTime conversation that you and I had. I think when you guys had closed the doors, and I think you had 4 hours of sleep, 3 hours. I distinctly remember this. You had the same glasses, but slightly a different look.
Yeah,
And
I probably looked really sad that day.
yeah, I remember that, and I remember we were talking about the rent letter at the time. But let's go back, and when the doors closed, and you looked over your husband and your family, what was running through your mind with Kids Physio being such a huge brand and having to close the doors? What was running through your mind before the subsidies?
Mhm. It was, I think most clinic owners never, ever, especially going into physio, we never would have, this thought process just would never have crossed our minds that we would ever close. Like it's not a business model that you think that we're not going to survive. People need physio, people need us. And so I think despite the fact that I knew we couldn't support our clients because we were, following our health guidelines, the most tragic part for me, and it seems really silly, was just letting down my employees with having a revenue split. So they're employees as well, but we do a commission-based employee model. With no revenue coming in, there was no way we'd be able to continue to pay them. So I was grateful for having employees because I knew right away they could access EI when we had to give out those temporary layoff letters. But it was still gut-wrenching to have a conversation with somebody to say, hey, listen, I can't actually keep employing you. We don't have enough in our back pockets to keep the doors open even for 2 weeks. It's just not how we run. And so it was definitely a tricky situation. I think more than anything, it was just that real sadness.
And so your first incentive that you thought that was going to change, not necessarily the biggest one, but what was your first? Was it the CBA as well?
Well, yeah, I mean, just like Raj, we did access the CBA because it came out first, and it was just nice to have a little bit of a cushion there. But the wage subsidy for sure was an absolute game changer, particularly when we also were closed. So we were actually closed for 2 months or just over 2 months, and having that wage subsidy kick in where we could say, okay, we've never had this opportunity to harness the brain power of our physiotherapists, and we have 60 of them. So what are we going to do with these guys when they're off work? Many of them sitting at home collecting EI or then collecting the CERB, and saying, but we still want to do something. What can we do? And so we were able to really pivot, that word of 2020, and say, okay, what do we want to work on? Just like Raj mentioned, what are some of the systems and strategies and things that we've always said, we'll do that next year, we'll do that next month, and we never get time to do it. We actually sat down and did a whole brain dump of all the things that we really wanted to accomplish. And then we had people doing special project work from home. So it was being able to then get people off of the CERB, back working on meaningful work that then set us up to actually increase the value of our brand. So despite it being like, oh my gosh, with this huge loss, it turned into such an opportunity. And I can now say we probably would never have worked on some of the stuff that we did work on without COVID. So I'm almost, in some circumstances, a little bit thankful, which is a really weird position, but certainly thankful for the Canadian government. I recognize that we're going to be paying for this for an awfully long time, but very proud to be part of this country so that we have this ability to keep our businesses open and even prosper in some circumstances.
Awesome. So Laura, just what you're saying is that you had like almost like a 2-month boot camp with your team to like move it in directions that the 10% wasn't getting done. Is that correct?
Yeah, I would say so. Yeah.
So you guys, so for you guys, using the wage subsidy was a methodology of when the doors open, when the green light went on, you guys were running, and not only just running in the same direction that you guys were running before COVID, but in new directions and perhaps new pathways to bring more abundance to you guys.
Yeah, and so I'll just give you an example. We have always done home exercise programs for our clients, and keep in mind, we work with children. So the vast majority of home exercise programs are not tailored to children. So our physiotherapists use Simple Set. There are some PEDS exercises there, but not enough for our business. So we used the time of the wage subsidy. One of our special projects was for anybody who had a child at home. So if you had, like I have a 7-year-old, I would be taking pictures of my son doing certain exercises, and we actually uploaded them and customized Simple Set. But I had employees doing the same thing with their kids at home, just like I was. So we ended up leaving the quarantine period, or the 2 months closed, with brand new customized exercises that we now, as soon as we were open, were able to use for our clients. So that's just one example of a project that we worked on that we actually benefited from being able to use later on.
Amazing, Laura. So Raj, before we're going to pivot over to Alex, You want to share one of your innovations? You talked about innovating into a new dimension, some sort of products that you guys were doing that were byproduct of the wage subsidy.
Well, I mean, similar to Laura, we were actually the first and foremost thing was taking care of our employees, right? So we were able to, excuse me, get them off CERB and back into some sort of meaningful work. We did use them to, do virtual calls and all that kind of stuff. Some of the money that's coming from CEWS, because it comes as revenue, we've been able to actually reinvest into marketing, and we've been able to sign up with actually like an awesome marketing service that combines all of our social media, our newsletters, our emails, and everything is just combined, and including redoing our website. So we've been able to kind of pivot and invest that money into better things that we also didn't have the time for. And obviously, as you guys know, GTA in orthopedic is a very competitive market, so we've been able to invest the money into that to help us kind of come out as a better competitor, and even with the SEO and all that kind of stuff. So
Phenomenal.
we were able to do it. Yeah.
Phenomenal. Thanks, Raj. So, Alex, man, I'm going to put you on the hot seat. You could see, one of the first things that when I was conversing with Laura about this seminar, I said, we're looking for you to provide some accounting strategy. And the first thing she said to me was, I don't provide any accounting strategy. I defer it to my accountant. And so I'm deferring all the accounting advice to yourself. You're on the hot seat because I marketed this session as the anti-lecture, the anti-physio boring thing. So you're on the hot seat to make this freaking exciting. So Alex, you're on the mic, and I hear you put some serious work into this with the CPA solutions. I'm going to make you the first time ever a non-physio co-host. So what are you going to do with that?
Yeah, well, thank you. As tax is actually a lot more interesting than physiotherapy, I think. But like my COVID experience was a little bit different. Just to share a bit with you. COVID hit our clients really bad, and because we have a lot of medical professionals and physiotherapist clinics, they shut down all their clinics. So it was a bit of a wonky time. But then what happened was the government started releasing all these legislations. They kept on going. They kept on going. They kept on giving grants, and they kept on changing things. And a lot of this started back when Trudeau gave his marching orders to finance to go and come up with a plan where they can help. And they tried to come up with a few things, and then they helped. And just like anything else that's done in a rush, what they ended up doing is that they let out a program, and then they made tweaks to it. And this is what caused a lot of confusion for a lot of business owners on how to do it. And just with any other government program that you see, it becomes really complicated. And especially when it's government funding, things become complicated. So one of the major things that did come out was the CEBA, which a lot of our clients did take, and it did help them quite a bit. And we'll touch upon that. I made a bit of a presentation on this. It's rather technical in nature, but we'll try to get through it. I'm going to try to really make it so that the average business owner can understand. The CEBA did come out. We'll talk about that. Then the 10% wage subsidy came out. The 10% wage subsidy was initially thought by the government to be the wage subsidy that they were going to give business owners, but then they realized it wasn't sufficient. There was a lot of pushback in Parliament. So the 75% came out. When the 75% wage subsidy came out, it was really complicated. But what happened is when Bill C-20 came out, subsistent to that, it seemed a lot easier than what happened in the future. So what we're going to touch upon basically is we're going to touch upon the CEBA for a bit. We're going to touch upon the 10% wage subsidy, but we're going to spend a lot of our time on the 75% wage subsidy, because I think that was really relevant, and it helped a lot of our clients out, come out of the woodworks and come out strong. They got a lot of good incentives on it. So I did prepare a presentation for us. I'm going to quickly run through it. I'm going to share my screen, and hopefully this works, and we can get going on this presentation. So hopefully everyone can see this presentation now, and it's something that I've written up real quickly on the subsidy. So we were all feeling like this, right? When at least the accountants were, we were all like, oh my God, what are we going to do? This big subsidies come out. It's complex. A lot of business owners were didn't know how to access some of these incentives, and really the government themselves didn't have a good idea of how to implement So what they did is they came out with the first bill, which was initially supposed to be the whole 75% subsidy was supposed to be really a 12-week program. Within 12 weeks, they were going to shut down this program and they were going to move away from it, and hopefully the economy would get back in order. Now, what happened was that they quickly realized that this wasn't a 10-week, this wasn't a 12-week program. So what they tried to do is they extended it further, and what they did is they introduced Bill C-20 to extend it further, and that extended for another 24 weeks. But the way the second set of this legislation works is that what happens is that they end up what they're trying to do is they're trying to get businesses back on their feet, but they're trying to lower the subsidy over time. So it's really important to understand some of these fundamental concepts as a business owner on how these subsidies work and the way they work. So one of the key things that they came up with was a qualifying period. So every subsidy, you have to have a period in which you can qualify. And then you have to be able to reference your revenue drop, and it's all based on revenue. You have to reference your revenue drop to another period. And that has to be multiplied by a specified percentage. So when they initially came out with the program, there were really 4 periods that they were looking at, okay? And these 4 periods had a qualifying period that ended in June. And the whole idea was that if you had basically a 30% drop in revenue, you'd qualify for these subsidies. With the exception of the month of the first period, because it was really half a month. March 15th was the date. So they had a 15% drop. So it was really straightforward. Everything was simple, right? What you could do is they kind of accommodated employers. They said, well, you have to compare your March revenue 2020 to your March 2019 revenue, and so on and so forth. But if you feel that you did not get there, then what you could do is you could file an election with the government and average out the subsidy for January and February 2020, or if you were a new business, you could use your January and February 2020 revenue and compare it to your March revenue to see if there was a real drop. So that's what happened. Now, one of the key things that they did was, like, let's say you qualified in March, then you automatically, there was a deeming rule in the legislation that you qualified in April. So you'd get 2 subsidies for sure if you qualified. So that's the way it generally worked. But in order to get into these subsidies, your company had to meet certain tests. One of the tests was it had to be what's called an eligible entity. And the other test was that it had to earn qualifying revenue. So your company had to be able to do that. So what was an eligible entity? For our purposes, the legislation's complex, but there were 3 things that are important to physios. First is that it has to be a corporation, right? That's not a public institution. We won't go into what a public. It could be an individual who could qualify for this subsidy if they paid someone. And the other one that's really important is, in a lot of clinics are structured this way for various tax reasons and all, as partnerships. So a partnership could qualify. Everything else, a charity and all, really won't apply for our presentation. Then what you needed to do was the company had to have what's called revenue, qualifying revenue. So qualifying revenue was determined as any money that was coming in, which was considered revenue for your accountants. So your accountants would generally calculate your revenue from your ordinary activities. On top of that, you could file a special election if you didn't qualify with the accrual basis of accounting with the cash basis. So you could monitor your cash and you could come in from there. What was really important was there was some special rules on these last 3 bullet points, which were non-arm's length revenue, right? So if you had people who were related to each other, 2 companies that were related to each other doing business, the calculation became really complicated. If there were M&A transactions, then there is a little specific complication there. And if you're entered into a joint venture, then there's some complications there. If you are in this boat, I would really recommend you get some professional advice, because those rules are super technical and are very complicated in many ways. And they would, in particular, if you bought a clinic, or if you had one clinic that was billing another clinic, this could become very problematic, or you entered into a joint venture with another clinic. And that could disqualify your revenue for the subsidy. What wasn't included was things like the wage subsidy revenue that was coming in, or extraordinary items. So that was out of your qualifying revenue. So from the entity perspective, you have to meet these tests. And from the employee perspective, you have to meet certain tests to get into the subsidy too. You had to be an eligible employee. There had to be an eligible employee. And there was something that was potentially complicated, which is a baseline revenue. you needed some baseline remuneration for this employee, which they may or may not have at this point, right? So what was an eligible employee for the purpose of the subsidy? It was someone who you employed in Canada, right, by the eligible entity within that qualifying period. So those three were the three major tests that you had to meet. So the person had to be employed. So therefore subcontractors could not qualify, right? And it had to be by an eligible entity, and it had to be in that qualifying period. One of the real confusing aspects of all of this in the first draft legislation or the first 4 periods was that, you know, you could have an employee that would have started with your clinic, but would not meet this test because they were not employed for 14 consecutive days. So they didn't receive remuneration 14 consecutive. So you had to back that out, essentially, right? So these rules are still very important in the continuing subsidy tests, okay? Baseline remuneration was also a very important concept. And this is where things get confusing because you had to compare the revenue from January 1st to March 15th that you paid this employee, right? And then you had to compare what you were paying them now. And then you had to decide which way to claim this subsidy. On top of this, this was also very important for clinic owners who were receiving a salary from their clinic, because the only way a clinic owner can get a subsidy on their salary is if they had a salary that they were taking out from the period of March 1st to March 15, 2020. So it becomes very important for clinic owners to have that salary. If you didn't have that salary, you just wouldn't qualify on your own clinic owner salary. So we saw a lot of people get stuck on that initially. They changed the rules in the next bill for the next few periods. So what happened on July 27th is that they released Bill C-20. And the whole idea was to extend the Canada wage subsidy for employers. But what they wanted to do was they wanted businesses to get back onto their feet. So you have to understand the intent of this legislation. The intent of this legislation was to help businesses that are still suffering from COVID, but also try to pull away that subsidy so they can start going back to wherever they were. So what they did is they introduced a whole bunch of new concepts, and they made everything a lot more complicated than it was before, because before it was easier, right? It was significantly easier. You had a 30% drop. You had an eligible employee. Your company was a qualifying entity. You qualified. You filed an application. You get it. But when the new legislation came out, it became seriously complicated, and it became really a monumental task because they kept ins and outs, and they did all kinds of wonky stuff. So what they did is they introduced more periods. They introduced period 5, 6, 7, 8, and 9, all the way till November 21st. And then after that, they have what's called the prescribed period. So that means that they can extend it further if they need to, okay? So they broke the subsidy out in 2 different places, okay? Because what they were trying to do is, if you had a revenue drop of 0 to 49%, then you automatically, your clinic qualified, okay? It doesn't matter. The 30% threshold was removed in the new legislations for these following periods. And now, even if you had a 10% drop in your revenue, you still qualify for certain subsidies, okay? If you were over 50% of a revenue drop, then you qualify for this subsidy, plus you qualify for what's called the top-up subsidy, okay? And we'll get into the top-up subsidy. So the subsidy now is $1,129 per employee, which gives you back $677. And if you notice, as the periods go down, the subsidy reduces over time, right? So it starts with 1.2 times revenue drop at 677. Then it goes down to 565 at 1%, 0.8, 0.4. So it becomes a lot more, it's trying to pull back that subsidy so the businesses can become self-sufficient. Now, the way you calculate it now is in different periods, right? So you have the current reference period and you have the prior reference period. So now what you can do is you can compare your July reference period or June 2020 revenue to July or June 2019. So what they've kind of added on another layer for you to compare. So your accounting has to be very correct in many ways to make sure, and you can still file the election. for using the average revenue for January and February 2020. So over here, what's going to happen is that you can change the way you calculate the subsidy from the first 4 periods to the fifth to ninth period. It becomes complicated. It becomes a very big mathematical exercise to see how you can max out on the subsidy. All right, because you can claim something. You can claim something in period 1 to 4, file an election, and change the way you claim periods 5 to 9. So for the upcoming subsidies, you should certainly be speaking to your accountant or someone who understands these rules very well, so that they can help you out.
Hey, Alex, I got a question for you, and this is one quick question. When we're looking at how do you account for the complexities of bringing new employees into the situation, or perhaps when you have independent contractors that decide to change their status to an eligible employee in that case? Could you comment on that?
Yeah, great question. So if you're bringing in new employees, it depends on what your relationship with that employee is at the end of the day, right? What you have to understand is that the government's very concerned about people, like, let's pick on Raj for a second. Let's say Raj hires his wife, okay? The government doesn't want Raj's wife to get a subsidy because of Raj. Okay?
Scammers.
You know?
He can't treat her ethically, but he can hire her.
I can hire her.
Yes, you can hire her, provided she does some work. But if you have an arm's length employee, then whenever they get hired and you pay them and you have a revenue draw, then what will happen is that employee will qualify for the subsidy automatically, but that salary. When you have a non-arm's length employee, someone who's related to you who you hire, right, then they need what's called baseline remuneration to qualify for that subsidy. So they're trying to avoid business owners not to hire their family members to try to get the subsidy. If you have a subcontractor that becomes an employee and you enter into an employee agreement with them, then what will happen is that they will qualify. But there are a whole host of other tax issues that come up when you convert a subcontractor into an employee, which you have to be cognizant about, right? And those are, well, they're always employees before, and will CRA take the position they were employees before, you might get deemed with a whole bunch of other unintended tax consequences that could happen, right? So you have to be a bit more careful. You have to do a very careful analysis on converting a subcontractor to an employee. It's generally, obviously, for the subsidy purposes, it's way better to have employees than a subcontractor, right? But to answer your question in a nutshell, yes, once you hire that employee, you will get that subsidy on a go-forward basis, provided they meet the test, right? So let me just quickly comment on the base subsidy and how it's calculated. So let's say that you had a clinic that had 100,000 of qualifying revenue in July 2020, okay? But in the same period in July or June 2019 or January or February 2020, it had 320,000 of revenue in that month. What will happen is that represents effectively a 68.75% decline in revenue. The result is that the base subsidy will be 60%. So the way it works is if you paid your employee $1,129 per week, you multiply by 60%, you get a subsidy of $677.40. Okay? If your revenue was below that 50% threshold and it was 37.5, for example, then you take the 37.5, you apply it by this revenue factor of 1.2, 45%. So you take whatever you paid that employee, you multiply it by 45%, and that is what you get per week, $508 for the subsidy. Okay? Then you have what's called this top-up percentage. Okay? This top-up percentage is really for those employers who've been seriously hurt by COVID, such as your restaurants, potentially if your business was in downtown Toronto. We had a couple of clients who were physiotherapist clinics in downtown Toronto, in the path over here, which is all underground, and that's been shut down. So they've been really hurt through their business. So what they tried to do is they tried to give you, if your revenue declined in the preceding 3 calendar years, so in this particular, in period 5, was if you compare the revenue for April, May, June 2020 to April, May, June 2019, right? Or January, February 2020, then you get, and it's a 50% drop, you'll get what's called the top-up subsidy. So you get that on top, okay? But that top-up subsidy is also ground down depending on your revenue. So you get 0 if it was 50 or under in your revenue drop, all the way up to, if your revenue drop was 70% or over, you get 25% of it, okay? So the way this is calculated is you take the 1129 per employee that you pay a week, multiply it by 25%, you get an additional $282 per week for that employee that you pay that. So add that to your base subsidy, you get $960 for the 1129, which is 85% of that employee's salary back. Okay, so it can go up all the way to 85%. So what you need to do is now you need to calculate whether you can get this top up and base subsidy, and it's better for you than getting that old 75% subsidy. So really it's an 85% subsidy now that they've increased it by. If you compare it over the different periods that they've done, you'll notice that it's a sliding scale and they drop it every period up to November 21st. And then if they announce more periods, I'm sure they'll be dropping it more. So that's how the top up subsidy works. But now what happened, what they did is when this legislation came out, period 5 was already in there, right? People were applying for period 5. So then the government was like, well, you know, we can't take away the 75% subsidy. So what they said is that if in periods 5 and 6, you are better off claiming the 75% subsidy, we'll give you the 75% subsidy for periods 5 and 6, but from period 7 onwards, you have to go down on that sliding scale and drop, okay? So what they did is, and I'm going to go over this real quickly because baseline remuneration is complicated, but let's go back to Raj and his wife's example, right? If Raj decided to lay off his wife, right, in 2019, okay, where he paid her, and then hire her back, and she had baseline remuneration then Raj could claim a subsidy on his wife, right? Because they changed the rules on how the subsidy works. This also helped owners out because if owners weren't getting paid from January 1st to March 15th on a salary through their clinic, but they had a salary from March 1st to May 31st, 2019, then, or subsequently July 1st to December 31st, then that owner could also get a subsidy even though they didn't have any remuneration in January and February, okay? So what this means is that now we might have to go back and amend a bunch of claims that we've done because they've retroactively adjusted all this, or if there's any elections to be done, okay? They also changed this eligible employee test because if you recall when I said earlier, the 14-day test no longer applies. So if you just hire an employee, but they have not been remunerated for 14 days, you can still get the subsidy. That was one of the big problems with the first set of the legislation, right? Other changes they really quickly did was what they did is now you can file for all these periods up to January 31st, 2021. So even if you have not filed for the wage subsidy applications, you can still qualify and file it up to January 31st, 2021, right? There is a deeming rule in the Act which says that if you qualify for one period, then you automatically qualify for the next period. So even you should really work through your numbers and see if you qualify even for one because you're going to end up in the next period, you're going to qualify as well, right? Now, one of the big problems that was happening was the CRA didn't really understand the legislation very well when it first came out. And the government wouldn't issue the checks because they were like, oh, well, you know, you don't qualify, but when in fact they did, but there was no mechanism for the CRA to appeal that decision. So they introduced an appeal process. So if you've been denied, it might be very relevant to see if you can appeal that decision now. Okay? There are penalties over here, and you have to be very careful with this. And Finance Minister Moreau really tuned into this, right? And one of the things is that there are very significant penalties if you are willfully trying to claim a subsidy when you should not be, okay? And those penalties range from basically 100% of the subsidy to double of that, potential criminal penalties, and even jail time, right? So if you're trying to manipulate the system or you're trying to create fraud and you're purposely trying to do it, which no one really does, but this is really, they're very significant penalties in not getting it right, okay? So in summary, what do you need to know as a business owner? You need to have an eligible employee that earned eligible remuneration, which is usually salary, right? you're a qualifying entity, eligible entity for this, and your decrease in revenue, and there is a decrease in revenue. If you can even take this slide and you can take away this takeaway right here, this slide, that's more than enough for you to understand if you're qualified for this subsidy. Okay. Now we're going to just really quickly.
Alex, Alex, a quick question for you, just for the viewers out there, getting some messages. So if someone for whatever reason has not applied for the wage subsidy right now, would you say that they were going to come out ahead based on the new changes or the way it was prior to the amended changes?
Well, the way it works, Kareem, is like for the first 4 periods, you have to go through the prior changes. Mm-hmm. You don't have the choice of going back. There are certain elections you can file, which might make you ahead in the first 4 periods based on the new legislation, but those are very limited, right? The following periods, you will generally, depends on how much your revenue dropped, right? So take my example of the physio clinic in the PAT system. Their revenue significantly dropped. They don't have any revenue. No one's coming there, right? So for those people who are not in Toronto, PAT is right in the downtown core, right? For them, the next few periods are significantly better than the previous periods, right? So it really depends on how your clinic fared through this whole COVID issue, right?
So Alex, another question for you is, and I know that we have 2 phenomenal business owners right now that have their physiotherapists as employees currently, employee model, but there are other clinics out there that operate on independent contractors. So they hire independent contractors. Now, I have significant experience with that, but can you comment on independent contractors that are professionally incorporated and pay themselves? Are they eligible to come out at this wage subsidy on their own accounting?
Yes. If you're incorporated and you are paying yourself a salary, and provided you paid yourself a salary from January 1st to March 15th, or you paid yourself a salary in 2019 under those period dates, right? Which I can just show you real quickly, right? If you paid let me see if I can get back to that one slide that I want to show you, right? These periods. If you qualified, if you paid yourself a salary within these periods and you were professionally incorporated and you were billing another clinic, then you could qualify for the subsidy, right?
Gotcha.
But you have to be, if you're paying yourself a salary, this subsidy is only for corporations and individuals. Individuals will not qualify if they're not paying the subsidy, if they're not paying another person a salary. But if you're incorporated and you're paying yourself a salary and you fall within this period, within these periods, and you paid yourself a salary, there is a very good likelihood that you are going to qualify.
Awesome. Alex, do you think this would be a good time I know there's a lot of people watching this right now. Do you think this would be a good time to get some questions from our panelists or the attendees to throw a question in the chat, or Laura or Raj, any other comments, any other challenges that you guys experience on your end with the wage subsidy that you think might be helpful for the viewing audience? So anybody, the viewers, if you want to dump that into the chat, make sure that's on all panelists and attendees. And guys, Alex is ready to go on the hot seat. So if you want to get on the mic and ask him directly rather than type it out, let us know. Just put your name in the chat and I'll pull you guys up. But Laura, Raj, do you guys have any comments in regards to that wage subsidy? Because you guys have benefited greatly from this. What's something, it's one of these like aha moments for you guys where you're like, man, some of these viewers would really benefit from that?
Biggest aha moment for me. Sorry, Raj, I'm gonna.
Yeah, go ahead.
The biggest one for me was hiring or having somebody on my team who was able to make sense of all of this, create an incredible spreadsheet that we were then able to populate and get a really good understanding of how it worked. As a physiotherapist, this is not my smart zone, for sure, definitely not. But to have somebody on my team who was able to send me something that allowed me to be able to understand what it looked like for my clinic. Like I love what you've put forward, Alex. It's very helpful, but until I saw my clinic numbers with my employees' names in there, that's when it really started to make sense for me. So if you have the ability to get some support on that, is my biggest
So just to add to Laura's comments, and I think those are great comments because the only time like when I see this, it's very exoteric, right? Because it's talking to a whole bunch of clinic owners, and Laura hit it bang on. So one of the resources that the CRA has put out and is that there is a spreadsheet created by the CRA, and there's an online tool that you can populate yourself and see what type of what subsidies you will qualify for. It's not very technical, but it'll give you a good idea of what you're going to qualify for. I would use the spreadsheet, just like Laura did, or she created one. It really helps in modeling it out to see if it's worth the cost and effort to go through this stuff, right? Because it can become a very complicated exercise. There is another company called Tax Templates Inc. that also created a spreadsheet just like this. It was more geared towards accountants to help them out. But I think that the CRA resource is really useful, and it will really shed a lot of light on this stuff. And we, in our practice, also use it to verify our calculations.
So Alex, just to verify, that was the wage subsidy spreadsheet that's available on the CRA website?
Correct. I think they've modified it now to make it an online tool automatically. So you just go and punch a few numbers on their webpage, and you should get a good idea of what that subsidy will look like. Perfect. Right? Remember, these rules are technical and they are complicated, so you don't want to submit a claim without actually looking through some of this stuff, right?
Raj?
Yeah, I mean, I think the biggest thing for us was even when this was released, it was like, Alex, does this make sense? And how much money am I going to get back? Right? It was literally just on the call. And trust me, if you have a business, we don't tell people to do their own. They need to consult with us when they have injuries. We need to consult with accountants and lawyers when we have injuries. And this is an injury to our business, right? So it's been awesome. Like the biggest, I think the most help that having a solid accounting team has helped with this is to navigate this crisis. So I suggest that, everybody, call your accountant, become best friends with your accountant. They're really going to help you with these kind of things. And to be honest, like where the wage subsidy kind of helped us a lot was when we went out and we hired, and we're still hiring. And using this model has helped us determine how can we incentivize new hires, because it is a hard time to build up a caseload right now. And a lot of people don't want to move because of that, right? They kind of want to stay in, but we can use the wage subsidy to help incentivize that slow period while they build up a caseload and build it to success. So we've been able to creatively use the wage subsidy to incentivize new hires.
Yeah, I think it's really helpful. Like a lot of business owners, like, I always tell Raj this, and I tell other business owners the same thing. Like, you're good at what you do. Keep doing that. You'll make the money. Let us do what we're good at. It just makes intuitive sense, right?
So Alex, what do you got? I know you got this crazy presentation going on. What's left on your presentation that we can fire?
Well, we really quickly talk about the CEBA, and we can talk about the 10% wage subsidy if you want. Right, they're both important programs. I can quickly run through them. Like they'll take like maybe 5 minutes if you want, or we can just jump to questions if you want. And the attendees can read the presentation for those two.
Oh, that's awesome. So in the chat, guys, do you guys want to hear more about the CEBA, the rent relief, or the 10% subsidy? Put that in the chat right now, guys, and we're going to roll with it right now. So guys, in the chat right now, we want to see live feedback. We got CEBA, one for the CEBA. It's going once, twice, guys. What do you guys want to hear? 10% wage subsidy, CEBA, or the rent relief? All right, it looks like the CEBA is winning it right now. Oh, we got rent relief.
Okay. Well, the rent relief new extension was announced yesterday, so it's essentially, it's very, very tough to get a lot of detail on that. I know it's been extended till September. It's most probably follow the August model that if you qualified in the previous months, you end up qualifying in those months. I'm happy to go over CEBA with you. There are about 4 slides on CEBA. The 10% kind of interplays with the 75%. It's important if you didn't claim it, you should claim it, or for simplicity's sake, don't claim the 10% and claim the 75%, right, altogether. But you have to file a special election with the CRA to do that.
You can, just to confirm, you can claim for both the 10 and the 75?
You can claim for both the 10%, but then that grounds down your 75%.
Gotcha.
Right. Or you can choose not to claim the 10% because the 10% was the initial one that the government came out with. And that one was really bad. Okay. Like it wasn't enough for business owners. So what they did is that they put in the 75% underneath, but then they said, well, you can't claim the 10% and the 75%. So what they did is that they allowed you to claim the 10%, ground down the 75%, or not claim the 10% and claim the 75%. I think that's more than enough. The 10%, the way it works is you essentially take your payroll remittance and you reduce it by a specified $1,375 per an employee up to a maximum of $25,000. So
that's awesome, man. Like I want to know, based on an accountant's viewpoint, if someone gave you $40,000 and said, you only have to pay me $30,000 back, how would we best effectively use that? And how can that's a great question. See, the thing is, there's special rules on how you can use that money, right? It's not that you can use it to go buy a you go buy a car, right? I don't think you're gonna get a Lamborghini for 40 grand, but you can't go out and party with that money, right? I mean, it's supposed to be used for specific reasons, and the question is, will the government review it, right? If you want, we can quickly go through those slides. Let's do it.
Okay, so let me just share my screen real quickly, right? And then we'll go through that. Present. Okay, so let's quickly talk about the CEBA. So the CEBA was extended. The CEBA was the biggest problem with the CEBA, and I actually got interviewed by the CBC on this thing when it first came out, and I was not a big fan of it because what they did is that they turned around and they just allowed it for people who had employment income. And that was not enough because you had a lot of business owners who had subcontractors or had other expenses. So if you didn't have an employee, you were out of the CEBA, you didn't get it. So what they did is they changed the rules. So they came up with two different streams, okay? If you had employees and your T4 for the last year was $20,000, then you got the CEBA automatically. If you didn't have that employee, then you would go under the non-deferrable expense stream. And that was the second stream to get into the CEBA. So if your clinic had employees and your payroll was over 20 grand, you were out, right? You would get it no matter what. But what happens if you didn't have any employees? Well, then you'd end up in this non-deferrable expense stream. Okay, and in order to qualify for this non-deferrable expense stream, I mean, this slide is a bit wordy, but you had to file a tax return. You had to have what's called eligible non-deferrable expenses, right? You had to have a bank account on March 1st. Your business was not in arrears on any lending. You were a first-time borrower, and you had an intention of operating the business, and you had to participate in a quote-unquote survey, which could turn into an audit. All right. So what are these eligible non-deferrable expenses that you can spend your $40,000 on? You can spend it on wages. You can spend it on rent payments. You can spend it on leases, insurance, property taxes, utilities, debt service costs, and license and regulatory fees. But you have to be able to prove to the government that you are incurring these expenses for which you need that $40,000 if you're going to go down that stream. So you have to submit invoices and you have to submit, lease agreements, etc. Now, I don't know if any clinic owners have done this, but it is a really onerous task. We've done about 20 of these applications, and it is, the government accepts it, then they deny it. They can't read something properly. They go here, they go there, and it just becomes an ongoing exercise of submitting it again and again. And they don't give you any feedback, really. So it becomes very hard to get into this, but we have successfully at least got 20 businesses this. So what is the process of applying? You go to your financial institution, you say you want to apply for this, they have an online application, then they direct you to this website, application demands CEBA, and then you submit your documents, and then what happens is that you apply to it, right? The deadline was August 31st, they changed it 2 days ago, and now it's October 31st, so you can still apply for this $40,000. If you get the $40,000, right? We'll just skip through the slide because this is just the logistics of doing it, right? If you get the $40,000, you have to December 2022 to repay it back, and you keep the $10,000, right?
Gotcha.
So that's how that is.
That's awesome, man. So I want to pivot back to Laura and Raj for a second. So, guys, Alex has provided like incredible insight, and like you guys said, our wheelhouse is like AROM, ADL, MWM. Like they're not the CERB, all those acronyms, right? So what, Laura, I'm gonna start with you. What advice the Laura of September 2020, if you could go back in time and give the Laura of March 2020 some advice, what would you give her right now?
You can do hard things. You
Awesome.
can keep learning. Even, for those of us who've been out of school for a little bit longer, like you can keep learning. You can do hard things. And then the biggest one is that I would always now plan for a worst case scenario and look it in the eyes, see it, go, okay, that could happen. It's not likely, but something as simple as, what if there was a flood in my business? Those are things that I never thought about before. What if there was a break-in? What if there was, just all those things that you don't know could happen? And particularly, obviously, we didn't know that this was going to happen. So I would be prepared for worst case scenario, have a plan so that it's just a lot easier. It's not like you're just, sidelined for a few days of just trying to come up for air.
So have you guys, and this is advice that I would love for you to share with our viewers right now of, the potential waves of COVID. Do you guys have a plan already ready to go of, if X happens, we're going to go this way. If, Y happens, this is going to tell us what you got on the deck.
Would you like me to go, or do you want Raj?
We'll go with you, and then we'll bounce over to Raj. He's got lots to talk about.
I was given an opportunity to just think about this just by accident. A couple weeks ago, my son woke up with cold symptoms, and he was supposed to go to basketball camp. And cold symptoms was he had a runny nose, he had a bit of congestion, very mild fever. And right away, I was forced into okay, what do we do in this circumstance? We have to phone the camp, we have to tell them we can't go, we can't do all of the things. Of course, I had this personal experience of suddenly realizing that my child could have COVID. What do you do in that circumstance? So I took my personal experience. Now, fortunately, he didn't have COVID. He just had a common cold. But I took my personal experience and then translated that to our business. So I am a parent. What if I was a practicing physiotherapist as well and an employee? I would have had to stay home with my child. I was advised to stay home with him for 14 days and keep him away from other people. So if that was one of my employees who has kids, our business is already planning for, or encouraging our employees to plan for, if you have dependents and you need to stay home, what are your options? Is there an option to still come into work? Or are we also pre-planning to our our patients to be able to say, if your physiotherapist can't come in because they have children that are homesick, they themselves are sick at home, they can't come in because they have symptoms, can we instantly just pivot that back to a virtual session? So that the first instinct of the receptionist isn't to, so-and-so is sick, they can't come in, we're going to cancel all the patients. The conversation is, so-and-so is sick, call all the patients and ask if, well, one, can the physiotherapist still do a virtual? Are they well enough to do virtual? And if they are, then let's try and convert those clients to be virtual instead of just blanket statement canceling people for 2 weeks. Because that was a real fear of mine, that if all of a sudden we're all going to have to cancel and pause for 2 weeks, that ripple effect is not just our patients, it's our employees, it's everywhere. So have a backup plan for what it looks like when someone phones your clinics and says they're sick, if some employee calls and says they're sick. What are we gonna do? Be ready for that.
Love it. Thank you. That was inspirational.
And wear a mask.
Definitely.
That was the other strategy. I think I said just wear the mask.
Yeah, it is. That is such a hot topic. I had a patient long time who couldn't walk. It messaged me, said, I need to see you, and refused to wear a mask. And I was like, that's the policy, and said, I'll see you in 4 months when the truth comes out. I was like, scratching my head. I'm like, you don't want to walk for 4 months? So Raj, before I want to, while this topic is hot, Raj of 2020 with this slick do, I want to know, are you using a safety razor or what is that? That is amazing workmanship there. So now, are you using your goniometer to get those straight line there? But anyways, it looks pretty good. Let's show everyone on the monitor. Let's see that. Ooh. So the slick 2020 edition of Raj, September. What do they say to the March 2020 when he's ready to pull his hair out?
I think the best answer is it's kind of similar to Laura's, but don't get comfortable with the uncomfortable, right? Just never get too comfortable. And in fact, I don't even think we should believe in what's called a normal. As business owners, there's no new norm, and there should not be, because I think it's good to be able to adapt. Things are always happening, and we have to pivot. We have to keep adapting. If anything, it makes us much better at business as business owners. So, don't get too comfortable and normal, and keep pivoting, keep adapting, and keep working away at what potentially could happen.
So what would you advise? You went from 1 to 3 clinics, the third one's, growing. What could you advise to the viewers there that are hoping to grow through COVID, hoping to grow through the next uncertainty, the 6 months, a year, however long this takes, and depending on when people are watching this replay, what piece of advice could you allow for them to bulletproof, just like Laura said, bulletproof through growth through any crisis? What would you offer?
I think from a standpoint of, and a lot of our colleagues here in physio and chiro, we've seen actually pretty good comebacks since we've reopened. And I think so much of it is that we provide value, right? And as we have to focus on what we do best, right? And your physiotherapist, let them do physio, let them do chiro, let them do what they do. You do your business, you focus on your business, always think about working on your business, provide value how you can. Because when you provide value, no matter what recession happens, no matter what happens, people are bought into you, and they bought into your brand. And as employees, they're bought into your company. As clients, they're bought into your company as well. So if you keep providing value and keep believing in what you do, you'll always be successful. Financial stuff's going to happen. There's going to be crises, but you'll always be successful, and you'll always come back. And we've seen that happen with all companies all the time. The ones that can survive recessions are the ones that just keep providing value to their client base. And use your resources wisely. Get those resources. It's always worth, it's worth that extra cost that we might not have wanted to invest. But you focus on your product, focus on your brand, and let the professionals take care of running what they're good at.
That's great advice, Raj. In keeping and respecting time for this hour session, we're going a few minutes over. I just want to know in the chat, guys, how many of you guys want to have those slides available for you to review? Because I was looking at those, and there was so much gold nuggets in those slides. How many of you guys in the chat right now, just say the word slides in there, and we can see if we can bend Alex's arm to get that. So Marie says, yes. What slides? Slides. Carolyn says, yes. Alex, can we bend your arm and get those slides emailed to our viewers in the PPD Nation for our premiere episode, season 1, episode 1 of PPDBiz Academy? Tell me a hell yes.
Of course you can. I'll definitely send them to you, Kareem, and you can send them to the participants. I'm happy to answer any questions that they may have after.
Yeah, and how do we
on the slides, right?
Yeah, how do we get in touch with you?
Yeah, my contact information is on the slides. You can definitely email me, or you can call me. Look, if it's just a simple question on the slides that you need some clarification on, or something that's not right, I'm happy to just have a chat with you. There's no problems that way, right? And I'm we understand these rules. Like we've been doing it since the start, so we can definitely assist your business in many ways. By all means, give me a shout. Like there's no charge to just talk to some owner, right, about their business.
Thanks, Alex. I really appreciate it. Laura, how do we get in touch with you? If someone has some specific questions about kids physio, about bulletproofing through crisis, being a mom and championing it all, how do they find you?
Well, I always love a good Instagram chat through direct message. So I manage my own account, which is Kids Physio Mum, M-U-M. Otherwise, you can email me the old-fashioned way. And if anyone's interested in any consultation, it is something that I do. I take on one mentee every year, but I have started actually providing some consultation, particularly to female clinic owners. So I apologize to all the men out there, but it is a unique circumstance for women running their businesses when we're also managing our households and our families a little differently too. So hit me up. I'd be happy to chat.
Awesome, Laura. Thank you. And from going from the kids physio to the cool kids and the GTA in downtown Toronto, Raj, how do people get in touch with you if they've got questions?
First of all, it's an amazing initiative, Laura. That's awesome. Good on you for doing that, taking on mentees. You know, everybody knows I love talking about myself, so you can reach me. You can reach me right there at Raj Sapaya PT on Instagram, or you can email the clinic, Instagram the clinic too at Foundation Physio. Just send us a DM, and you know, happy to chat and talk business, talk chat, talk life. You know, I love meeting people. I love helping the community. It's something I really want to grow into, and something I want to take on. So love to meet all you out there in real life or over Zoom.
All right, guys. Thank you, Raj. Really appreciate it, guys. In the chat, guys, out of 10, 0 is no value, 10 is absolute value. What would you rate this presentation for season 1, episode 1 of the PPDBiz Academy? Put it in the chat. And then while it's in the chat, guys, thank you so much, guys. Wendy Coombs, the champion from Calgary, 10 out of 10. I really appreciate that, guys. Thank you so much for joining us. Really appreciate that. Look out for the Sunday Sizzle coming up. We will be sending you the slides. Thank you, Alex. Thank you, Raj. Thank you, Laura. Thank you, everyone, for joining us and being part of the first ever PPDBiz Academy. Looking forward to your success across the nation. Thanks, guys. Have a great night.
That's the second half of the Raps game. Go Raps. Killing it.
Let's go.
Let's go.
All right,
Bye,
guys.
guys.
Thanks
Thanks,
very
Kareem.
much, guys. Thanks, guys. Thanks, Alex. Thanks, Raj. Thanks, Laura. We'll talk to you guys soon.